Capitalize is like a second family to me.
As an immigrant, you know what it's like to invest in the future. Progress is just a natural state.
Data and technology to build trust between the insured and the insurers.
Liberates you from the tedious and time-consuming financial workflows so that your workforce can focus on the work that really matters.
Securities exchange accessible to any issuer, any investor.
Inspire the younger generation, and at the same time build a legacy of the Hong Kong's culture of inclusivity.
To empower the underserved and unserved with access to the right insurance protection.
The journey for knowledge and experience is a long one.
Success is in the journey, not the destination.
Stay hungry, stay foolish. Every success and failure is just another step.
We'll find out together.
Hello everyone, and welcome to this Asia Pacific FinTech Innovation Lab Demo Day. My name's Nick Conlon and I work for Accenture here in Hong Kong, and I'm delighted to be walking you through today as your MC for the remainder of the afternoon. Just a bit in terms of the structure of today. We're going to start off with a few introductory comments from a representative from the Hong Kong government, as well as our lead for Hong Kong here for Accenture. We're then going to move over to our 10 FinTechs. They've done fantastically well to get to this stage. There are 10 finalists, and they're each going to have 10 minutes to show you what they've been doing, what their next focus is going to be, really what their vision is. And then we're going to move on to a panel, which is going to be some of our banking leaders, 3 of them across Hong Kong, who are going to be talking a little bit about what the future of banking is. And then we'll finish around about 5 o'clock today. Before we start, just a couple of basic house rules. So you should hopefully be seeing me in the middle of your screen on the website. Now on your, let me get this right, on your right-hand side, which should be over here, you have an opportunity to raise questions with some of our speakers, some of the panelists, but in particular, our 10 FinTechs. So you should be able to simply raise a question there. We want it to be as interactive as possible. Second piece, second house rule. Just above, you should be able to see an option there for getting information on the FinTechs. If you just click on it, it will break down the 10 FinTechs to give you more background on them, and you'll be then able to select booking a meeting with them and an option for either 15 minutes or 30 minutes so you can have a one-on-one with them to understand a little bit more outside of this format. So just a reminder, so for today, for this afternoon, for the next 3 hours or so, we will have introductory comments from one of the representatives from the Hong Kong government, as well as our lead here in Hong Kong with Accenture. We'll then go to the 10 FinTechs, where they'll explain what it is they do, finally end up with a panel discussion on the future of banking. So without further ado, I'd love to pass you on now to our lead for Accenture here in Hong Kong, who is Ravi Chabra. So Ravi, over to you.
Thank you, Nick. Mr. Alfred Sitt, Peter, ladies and gentlemen, welcome to the 7th FinTech Innovation Lab Asia Demo Day. FinTech Innovation Lab is a mentorship program created by Accenture that helps startups fine-tune their business plans and solutions. We have labs in New York, London, and Hong Kong. What we do at the lab is bring together the best and the brightest. We see the need for introducing people with solutions to those who have challenges. Since we established the lab in 2014, it has received more than 1,000 applications and mentored 49 alumni. In total, they have raised $525 million and created more than 1,500 jobs after participating in our program. For the past 10 weeks, 10 incredible startups have worked with some of the world's most influential financial institutions here at the Accenture FinTech Innovation Lab. And today, our startups are here to present their ideas to you. I'd like to thank the following financial institutions whose senior executives have dedicated considerable time and effort in coaching the startups. AIA International Limited, Bank of America, BlackRock, China Construction Bank Asia, Credit Suisse, Dah Sing Bank, Generali, Industrial and Commercial Bank of China, Asia Limited, JP Morgan, Macquarie Group, Maybank, Morgan Stanley, Natixis, Saxo Markets, Societe Generale, SC Ventures by Standard Chartered, Sun Life, ZA International, and Zurich Insurance Company Limited. I'd like to express our thanks to Cyberport, who have been a strong and committed partner of the lab since its inception in 2014. Cyberport's leadership team, Chairman Dr. George Lam, CEO Peter Yan, and Chief Public Mission Officer Eric Chan, have all taken great length and shown a huge support to this program. We really appreciate our unique partnership with Cyberport. I'd also like to thank Invest Hong Kong, FinTech Hong Kong, and industry experts such as Baker McKenzie, Connect Communications, GWEEK, and all of our independent mentors. Thank you for participating in this mentorship program, offering your invaluable advice to these future FinTech stars. This program indeed has a track record of nurturing FinTech winners. To name a few, WeCash, our 2014 graduate, has become a FinTech unicorn. It has served over 160 million users worldwide and raised nearly 300 million in equity financing. Identity, an Australian regtech startup from our 2015 class, is now a publicly traded company in the Australian Securities Exchange with a market cap of 16.4 million Aussie dollars. Cybernetics, a London-based regtech company, a 2015 graduate, was acquired by Nasdaq in 2017. And TNG Wallet, a 2016 alumni, its holding group TNG FinTech Group has now raised $90 million and continues to make waves in Hong Kong and Southeast Asia. We also see many of our lab alumni are on track to become rising stars, such as Blocko, Know Your Customer, CoverGo, Leap Expert, Mello, and Mediconsen. Thank you to our startups for your enthusiasm and your trust in joining this program, making Accenture your launchpad. Apart from our partners, startups, I'd also like to thank the Accenture program team, led by Michael Zweifler, Jeffrey Brewer, and Hui Jackson. Such a great team effort in making this such another successful program, despite the challenges of the pandemic this year. The pandemic has not stopped the demand for innovation in financial services. In fact, we're seeing more firms accelerate their digital transformation journeys, and investors are increasingly looking at fintech solutions to help banks, insurers, and payment firms improve how they operate and serve customers. We remain committed to nurturing a healthy forum for startups and financial institutions to learn from each other and continue to innovate. Again, thank you for joining us in the 2020 program, and we look forward to hearing what new ideas our startups bring us today. Back to you, Nick.
Great. Thank you very much, Ravi. It's now my pleasure to introduce Alfred Sitt, who is the Secretary for Technology and Innovation for the Hong Kong government. So, Mr. Sitt, over to you, please.
Warrington, Peter, distinguished guests, ladies and gentlemen, good afternoon. I'm most delighted to join you all virtually today at the Accenture FinTech Innovation Lab Demo Day 2020. Although we are not meeting face-to-face, thanks to technology, we are now connected. Since 2014, Cyberport has been a partner of Accenture in hosting the FinTech Innovation Lab Asia Pacific in Hong Kong. I'm pleased to witness the continuing success of this accelerated program in the past 7 years. In connecting early stage and growth stage FinTech startups with global leading financial institutions to accelerate commercialization of innovative financial business ideas. On the scorecard, they include mentoring 49 startups and raising more than $525 million investment funding. Apart from Accenture and Cyberport, credit should also go to the concerted effort of a strong financial sector of venture capitalists here in Hong Kong for their contribution to the success of the program. Being one of the key international financial centers with strong presence of many global players, Hong Kong indeed has a lot to offer to fintech startups. Connection and opportunities are no doubt two important aspects. I'm sure you had the experience of meeting and learning from your mentors in the past weeks, which may have already opened up opportunities for you. Today's demonstration of your business solutions to venture capitalists and financial industry executives would open up even more prospects. And good luck to you. FinTech is one of the key focuses of our innovation and technology development in Hong Kong, alongside other areas such as smart city solutions, AI robotics, and healthcare technology. Cyberport has been one of the early parties in driving FinTech development in the initial stage, mainly to provide dedicated co-working space for FinTech companies and nurturing FinTech startups in their first steps in the entrepreneurship ladder. With more than 360 FinTech companies and startups, Cyberport is the largest FinTech cluster in the territory. We also see such efforts bearing fruit in the past years, with 4 licensed virtual insurers, as well as 2 out of the 8 virtual banking licenses coming from the Cyberport community. The presence of these companies will no doubt create great synergies and cooperation opportunities with global FinTech companies and financial institutions. Driving the innovation and technology development remains high on the agenda of this term of the government. Our Chief Executive has outlined in her policy address this year a series of measures and initiatives on different fronts to develop Hong Kong into an international innovation and technology hub. This includes the development of the Hong Kong Shenzhen Innovation and Technology Park at the Lok Ma Chau Road. Being one of the key innovation and technology flagships in Hong Kong, I certainly look forward to the early completion of Cyberport expansion to provide more space and facilities for both large digital tech corporations and startups, no doubt including FinTech companies. As Albert Einstein once said, in the middle of every difficulty lies opportunity. After more than 10 months in combating the epidemic, we have all reached the consensus that we need to adapt to the new normal in both our daily life and the way of doing business. And a cornerstone to this is use of innovation and technology. The online delivery of financial services through virtual banks and insurers, e-commerce enabled by e-payment systems, global transfer and remittance, robot advisory, and other innovations are becoming mainstream. I encourage you to dream big and grasp the opportunities present in the testing time. I cannot wait to see how far your creativity and innovative ideas can take you. On this note, I congratulate Accenture and Cyberport on your accomplishment in nurturing FinTech startups and fostering the development of Hong Kong as a FinTech hub. I wish you all great success in your role of entrepreneurship. And most importantly, at this time, I wish you and your family good health. Thank you.
Great. Thank you, Mr. Sit. And now it's my pleasure to pass over to Peter Yen, who is the CEO for here in Cyberport. Peter, over to you, please.
Welcome everybody to the Accenture FinTech Innovation Lab Asia Pacific Demo Day 2020. I'm sure all the 10 startups participating in the Demo Day this year had an enlightening 10 weeks. Through the trainings, workshops, and speed dating sessions of FinTech Innovation Lab Asia Pacific, you must have now a good understanding on how best to pitch your solutions. I congratulate you all for having made it through this challenging but rewarding 10 weeks. It is our honor to be the partner of Accenture FinTech Innovation Lab since its launch in 2014. Cyberport and Accenture share the same mission to nurture and cultivate technology entrepreneurs and talents, especially in identifying and accelerating FinTech innovations in a collaborative environment to promote FinTech growth in Asia Pacific. Over the past few years, Cyberport's incubators, which joined the program, like CoverGo, Gecko, HSPA, MediConsent, Leap Expert, and TNG have achieved great success and won multiple other awards locally and overseas. This year, we further enhance our partnership by offering more trainings and business opportunities to the startups. These include access to Cyberport Venture Capital Forum and trainings under our Cyberport Academy, attend knowledge sharing sessions hosted by major stakeholders of the regional fintech ecosystem such as Invest Hong Kong, W Hub, and leading industry players like HSBC and R3. And there are also a number of pitching sessions to venture capital funds. These enhanced activities resulted in a greater impact of FinTech Innovation Lab and helped the participants better grasp the regional trends of FinTech industry. FinTech is one of the key focus of Cyberport. As the largest FinTech community in Hong Kong, Cyberport is home to well over 300 FinTech startups and companies, specializing in an expanding spectrum of fields including virtual banks, virtual insurance, e-payments, wealth management, etc. All 4 virtual insurance licensees in Hong Kong are Cyberport companies. They are Bowtie, 1 Degree, Zhong'an Insurance, and Avo Insurance. And 2 of the 8 virtual banking licensees, VLab and Zhong'an, are also our companies. The Hong Kong government has been most supportive of our FinTech development and entrusted us to administer various government FinTech industry programs, like the Financial Practitioner FinTech Training Program to upskill over 1,000 financial practitioners on FinTech, the FAST program to provide funding to create 1,000 FinTech jobs, and the recently announced FinTech Proof of Concept program to encourage further adoption of innovative FinTech solutions by financial services institutions. Cyberport provides a holistic program that is ready to support FinTech companies at each stage of their journey. Starting from our university partnership program to inspire the younger generation on FinTech, to our incubation program, to our accelerator support program, to market development support program, and many other partnerships with FinTech leaders like Accenture. For entrepreneurs who would like to springboard to the Greater Bay Area and other Belt and Road markets, Cyberport is here to make you successful. This year's FinTech Innovation Lab is probably the most comprehensive program we have ever organized since our partnership with Accenture in 2014. I look forward to your presentation in a while. Good luck and have fun. Thank you.
Great. Thank you, Peter. It's now my pleasure to introduce Michael Zweffler, who is the lead for the Innovation Lab across Asia Pacific. Michael's dialing in from Austria, and well, he's Austrian as well, so you'll have to bear with him a little bit when it comes to his humor. The jokes are hidden very, very deeply in there. But Michael's going to take us through a little bit of a journey back through time. So keen to hear this, and Michael, over to you.
Thank you, Nick. Hello, and welcome to the Accenture FinTech Lab 2020 Demo Day. My name is Michael Zweffler, and I'm looking after the program this year. But today is all about our 10 fantastic startup firms that have created solutions that transform the way financial services firms engage with customers and run their business. Essentially, new financial services capabilities and value propositions that are based on technology like analytics, artificial intelligence, automation, and many more. But what we also see is that the FinTech ecosystem becomes more mature and mainstream, which is no wonder, as the earliest initiatives that we would consider FinTech go back to the early 1990s. But today, and before we get going with our demo day, I would like to take you back in time a bit further than the 1990s. Actually, I would like you to follow me to about 4,000 million years ago. Why? Because this was the time when the first single-cell organism appeared on our planet Earth. But what happened then? Nothing for another 3,000 million years until multicellular life arose. So, in a way, it took quite some time until life on planet Earth got into gear. But then, 540 million years ago, the so-called Cambrian explosion led to a diversity of life on Earth that is breathtaking. It ultimately resulted in the emergence of humans, and as we all know, these humans developed a multitude of skills that made them a very successful species on planet Earth. Amongst many great achievements, humans also developed the concepts of money, trade, and economy. The first stamped coins were minted around 600 BC, and it took quite a long time until the 14th century that the first banks emerged in the trading hub of Florence in Italy. And from there, banking and insurance developed steadily over the centuries and has become a cornerstone of our economic system. And since the emergence of banking in Italy in the 14th century, banking has been and still is based on three fundamental capabilities of a bank. One, the ability to raise capital. Two, ways to develop relationships with people who have money and people who need money. And three, excellence in leveraging information. Even in today's banking environment, it's essentially those three fundamental capabilities that enable a bank to operate. But after centuries of steady and slow development of the banking business model, we can now see a Cambrian-style explosion of new banking business models, from customer experience over new products to payments. The underlying forces of this monumental change is globalization, technology, and changing customer expectation. And all three factors are providing new options for financial services firms to offer banking and insurance services in a completely new way. And this is exactly where fintech firms come in as incredible sources of innovation and creativity. So today you will see great examples of fintech solutions that are using technology and innovation to raise capital, develop better relationships with debtors and creditors, and help banks to leverage information and data in a way most have not even dreamed about until very recently. But despite the many great fintech firms and solutions, I am confident that we're only at the beginning of the evolution of fintech. Very much like with life on our planet, we will now see a Cambrian-style explosion of new fintech solutions. I also believe that fintech not only leverages technology, but also enables and accelerates the emergence of new technology. Just consider the potential of securitization and tokenization of so far non-tradable assets. This will provide funding and new payment systems that will transform not only banking, insurance, but many other industries. But most of all, it will simplify financial services and increase customer experience. Just consider the emergence of new technology like Internet of Things, 5G, artificial intelligence, and quantum computing, or the availability of very cheap new sensors like the new LiDAR sensor in the latest iPhone. There are thousands of entrepreneurs that already cook up new business models on the basis of these technologies. So, fintech, despite becoming more mature, is still in its early stages, and traditional banks and insurance firms better open up and partner with these entrepreneurs to take advantage of this very important source of innovation creativity for the sake of their business, their customers, and for helping to overcome the challenges that we are all currently facing, from financial illiteracy and poverty over pandemics to global warming. I hope that you are as excited about the potential of fintech as we are at Accenture, which is why we run our Global FinTech Lab program with great passion in Asia Pacific. I'm confident that you will find our 2020 Accenture FinTech Lab startups interesting, and I really encourage you to reach out to us and to them. And with that, thank you and enjoy the event.
Thanks, Michael. So now we have came to the main part of today, which is where we get a chance to listen to our 10 finalist fintechs explain a little bit about what they've been doing and what their vision is. So the first one up is Carda, which is an Australian-based data and analytics company. And it's my pleasure to pass over to Dean, who will walk you through for the next 10 minutes. Dean, over to you, please.
Thank you, Nick. Hi, I'm Dean Wynn, co-founder and CEO of Carda. Carda is an enterprise data startup, helping every business understand their data better. Why is this important? Because every business is capturing more data than ever, but over 90% of that data they capture is dark. Dark data is data that is underused and generating little value. And it's a consequence of not knowing what data you have and how do you use it. When you try to use dark data, it's like putting together a puzzle. You kind of know it fits together, but you're just not sure how. You don't know how other people have used it, so you have to work it out yourself. And even after you start, you may never get to the complete picture. This lack of knowledge and visibility leads to some very big problems. The first is that it cripples your productivity. 75% of a data worker's time is spent on just finding and understanding data. This is a huge waste, and the cost is significant when you consider how much you pay your data scientists and data analysts. And it's not a once-off either. You repeat it every time someone uses any piece of data. Dark data is also expensive. Most organizations will struggle to tell you what data they use and what is valuable. In reality, there is a lot of data sitting around that is costing more than the value it is generating. And when you don't know how your data is used, you also don't know if it's being used properly. You don't know if the wrong person is using the wrong data until well after an issue has happened. These problems are felt in any industry that is generating a lot of data, which just happens to be every industry now. It affects everyone involved in the data value chain, from the data workers to the data managers. If you're working in the financial services industry, then I'm sure you've been affected by dark data at some point. It's why even basic data analytics and governance is so hard for many. And that's where K comes in. K solves this problem by tracking how data is used to capture data knowledge, what a business knows about its data. K is like the GPS for a business's data ecosystem. K uses metadata and logs to automatically track how data is used across databases, data lakes, reporting and analytics tools. Every interaction with data is used by K to build a map of what data there is and how that data is used across the organization. Let me show you how K can help a data worker and a data manager to understand their data better. If you're a data analyst or a data scientist, K helps you understand your data ecosystem better. K keeps you informed of critical information like new content being created or changes to data that you have used. You don't need to be told about this. K figures out what is important for you to know about. K can also help you discover useful dark data and shortcut the time it takes to understand it by seeing how other people have used the data. K can also show you how trusted any data set is, so you can quickly decide whether it's the right data to use. If you're a data manager and you want to know how your data is being used, K can help you with that. You can use K to track who, where, and how your data is being used. This allows you to be proactive in managing your data, especially if your data is sensitive. You can also use K to track consent and intelligently crowdsource expert context to improve the quality of your data asset. Our customers typically see a 50% reduction in the time it takes to find and understand data. They gain a 10x improvement in the time it takes to identify and review data access, and also, on average, achieve a 15% reduction in data costs and dramatically shorten the time it takes to move data to the cloud. We are different to our competitors in the data catalog category in a number of ways. We don't just document data, we capture how data is used. Our approach to capture knowledge is highly automated. This means that our knowledge base is always up to date. Our competitors require a lot of manual effort, otherwise they go stale and become untrusted. We have a built-in human-in-the-loop process that increases quality and can also capture more context over time. and our platform is highly personalized and engaging. All of these differences means that we can deliver a more engaging, higher value, lower effort solution than our competitors. Our experience in this year's lab has been amazing. Every event, meeting, mentoring session has been really valuable. We built some great relationships, refined our use cases, evolved our roadmap, and have started planning out several POCs. This lab has really given us a great start to our plans to expand to the region in 2021. If you're from a business that has a dark data problem, then I invite you to join our customers who are using K to turn their dark data into productive data. And if you're interested in supporting us and knowing more about our fundraising plans in 2021, then please reach out for a chat. I want to thank you for taking the time to hear about our story and why we are so passionate about helping every business leverage their knowledge and their data. Thank you.
Thanks, Dean. Super first start. So it's my pleasure now to introduce Fano Labs, based right here in Hong Kong. So they are a speech recognition and natural language processing company. Over to you, please.
Thank you, Nick. This is John Boone from Fano Labs, the VP of Business Operations. Nowadays, when financial institute sells the financial products to the consumer, they are required to make a recording on disclosing the financial risk on these products to the consumer and get the consumer's acknowledgement on all those points. In order to make sure that all the points have been covered, the institute usually will use human beings to have a random checks on the calls to make sure it is compliant. In this case, the institute cover only 1.5% of the call, and the risk associated with all those calls can be fine is only below 4%. That caused the problems, actually. Let's see how those problems come in. Other institutes find out that they have an issue of the manpower to even have a random checks. So they designed to use Callinter from Fano Labs for this task. And the Callinter will transcribe all the voice recording into text first, and then use NLP to check each point and get the acknowledgement and see whether each point has been acknowledged by the consumer. By using Callinter, actually you get more call covered, in this case 68%. And more importantly, we find out, the Callinter find out more risk associated with the cost. In this case, 15% there. Other than compliance applications, Callinter can be used for different type of scenario. For example, in call center, Callinter will able to categorize all the call into different type, so you really know what's happening in the call center. Telco used Callinter to get the message or the insights on the churn information and reduce churn for 20% in one of the cases. And another telco using Callinter to discover really the sales opportunity to increase the conversion rate. And other institutes really use Callinter to find different type of business insights to improve their operations. We do find that we are very strong on the mixed language, and mixed language is very popular in Southeast Asian countries, including Hong Kong or even south part of China. The population in this area is talking about 600 million. We do find a tremendous market size in this market. So far, Callinter has been used in many institute organizations, and we are processing 1.5 million hours of recordings every year right now at this point, and serving, in another term, serving 20 million consumers. We got recognitions from different organizations, and as an update, last week we got the ICT award on really the FinTech technology from Hong Kong Institute of Bankers. We do feel this is a great honor and the recognition from the industry. Our team consists two parts. One is from the academic side. They have more than 30 years on the research of the mixed language. And I myself and Terence Pong are from the commercial side, where we have close to 20 years of experience on using AI technology in different applications. From here, you understand our solution and our team. We welcome different type of cooperation from you. It could be using our AI solution, including Callinter, to solve your pain point in your daily life, or a investment to Fenno Labs, so we grow together in long run. And another very interesting point is we are the designated local research institute, where if you invest in the product together with us on the development, if you invest $1 million, and you will get 3 million tax exemption from the government. That's a very good incentive for both of us. Thank you.
In speech analytics platform, speech recognition engine transcribes all conversation between agents and customers into text.
你好，我係有光信用卡嘅 David， 請問有咩可以幫到你？
你好啊，收到你哋嘅 statement 咧，見 charge 咗我500蚊嘅信用卡嘅年費，幫我 waive 咗佢啊。
We can also easily search for the audio based on the keywords we want to look up. For example, complaint cases.
Testing， 我要投訴八達通啊！我啱啱咧就換咗個電話號碼。
By leveraging natural language processing, we can understand why the customers are calling us, what are their intentions. The system can also automatically classify the nature of the calls, so that we can identify any potential sales opportunity. At the same time, it can also help us to identify any calls with potential risk, for example, breaching the compliance. We provide tools for you to easily locate these high-risk calls so that you can catch them before the regulators do.
歡迎致電聲紋驗證示範系統，請選擇服務。註冊聲紋請按1字，驗證聲紋請按2字。請輸入4個位嘅戶口號碼。註冊聲紋需要收集你3段隨意嘅説話。第一段，請你喺嗶一聲之後隨意講出10秒嘅説話。
Hello, I'm a current customer of your bank, and recently I'm planning to open up my small business nearby Causeway Bay. So my
第二段，請你喺嗶一聲之後隨意講出10秒嘅説話。你嘅聲紋已經成功註冊，請選擇服務。註冊聲紋請按1字，驗證聲紋請按2字。要驗證，請你喺嗶一聲之後隨意講出10秒嘅説話。
Hello, I would like to find out about the progress of my loan applications. My application number is 1234. I submitted my.
你已經通過聲紋驗證。
And now on to our third fintech of the day. They are Knight FinTech, based in India. They focus on treasury management and credit assessment. And I'll pass you over to Kushar to explain for the next 10 minutes.
Thanks, Nick. Hello, everyone. Thank you so much for having me here and giving me this wonderful opportunity. My name is Kushal, and I am founder and CEO of Knight FinTech. At Knight FinTech, we are on a mission to digitally transform treasury, that is trading and investments, for banks and financial institutions. Think of it as an institutional trading and research platform that helps dealers and traders in front office of various financial institutions in taking informed and better decisions by leveraging quantitative and AI techniques. The platform has three unique value propositions. A, use one or more of our proprietary quantitative and AI strategies with high Sharpe ratio, that is reward to risk ratio of 3 going up to 3.5. B, use our institutional grade backtesting engine along with no code strategy builder. So if you have any idea in your mind, you can quickly build and have a reliable backtest where there's a clear segregation of model and data. C, robust risk management engine with integrated real-time news sentiment analysis so that you can relax while let the machines do the heavy lifting work. With this, I would like to quickly jumpstart with the presentation. So ladies and gentlemen, presenting you Knight FinTech, reimagining treasury with intelligent systems. Before starting Knight FinTech, I was working in Europe for a quantitative hedge fund, was chief architect for managing end-to-end trading systems, and was also responsible for managing various trading strategies, strategy building, as well as deployment. The core team member also has expertise from high-frequency trading domain, the company called RTS, which got acquired by Bloomberg. Apart from this, we are leading a strong team of 50 people. We are scaled up. Right now, we are managing close to $200 million of assets across 25 banks and financial institutions. We just discussed the core technologies about trading investments as well as certain regulatory aspects. It is an AI-enabled SaaS-based platform that empowers multi-asset, multi-currency global portfolio. So what are the gaps in the industry? Financial institutions, as we know it, they have invested significant amount of money and resources in getting access to large amount of data, as well as into execution of trade ideas and bookkeeping, reporting, compliance, etc. But what about analytics and decision making? Let us understand this better with an example. Meet Mark. He is an institutional trader working in front office for a bank. He is an extremely sharp guy and has access to some of the best resources in the world. He has access to Bloomberg with sea of information of data as well as real-time news. He has also access to some of the research reports, but all of this data and information is being analyzed by him in his mind, and he takes decision based on his experience and gut feeling. Now imagine a trading and research platform that helps Mark in processing all of this data and news in near real time and helping him taking informed decisions based on the rules that he has set in. So with the help of a robust, reliable, and institutional grade platform, we help people like Mark in automating their front office trading desk across various asset classes like interest rate, credit risk, equity, FX, as well as commodities. We help in various ways, right from yield curve positioning to bond pricing to statistical arbitrage to smart beta strategies, hedging strategies, as well as market neutral strategies. Our engagement model is simple and twofolds. A, use some of our proprietary quantity strategies with a high Sharpe ratio ranging between 3 to 3.5. Or second, let's co-create models, treat us as an extended research arm. So people like Mark can build simple or complex strategies, rule-based or nested rule-based, and they can build trading strategies on the fly without needing to write a single line of code. Second, that helps dealers and traders in making complex scenarios related to market and also help them in institutional grade portfolio stress testing as well as real-time VAR analysis. So the third one is 360-degree credit analysis and monitoring on a target company before we take any credit exposure. So for example, for a target company, the system can help in analyzing last 10 years of financials, can also help in analyzing the rating movements by the rating agencies. Now it's time for the action. It's time for a quick demo.
For decades, financial analysts and data scientists have struggled to build predictive models that effectively help in the management of financial assets. There is more data available today than ever before, and it remains a constant challenge to bring it together in a meaningful way for use in treasury management or credit assessment or monitoring. But what if we could combine the collective intelligence of financial analysts, data scientists, and dealers or traders with artificial intelligence? Knight FinTech perfectly blends machine learning, financial analysis, risk and compliance variables with treasury and lending using scientific data models, customizable with your business rules. Complementing human expertise with artificial intelligence to make sound decisions within a few minutes. Presenting to you a beacon of treasury.
The system has extremely powerful charts with annotations, Fibonacci, Elliott waves, etc., as well as all sorts of technical indicators. The charts are capable of handling million-plus data points asynchronously. Imagine the power in your hands to test any trading idea on millions and billions of data points on the fly without needing to write a single line of code. While there are backtesting systems in the market, only few can claim to have capabilities to run truly out-of-sample backtest with clear separation of model with data, so no future information could leak into the model. That looks lovely. It's simple yet extremely powerful, most likely unseen by the most. Now let us jump to more sophisticated AI-based models. Let us see some real strategies with high Sharpe ratio. As you can see, this is a state model that tries to identify market regimes and classifies them. A reasonably decent Sharpe ratio of about 2. Let us have a closer look. Doesn't seem to be a bad classifier. Interesting, isn't it? Let us look at Knight Scan report that highlights different components of your portfolio and makes intelligent recommendations. It can also perform value at risk analysis. The system can also create various scenarios for your portfolio and can perform stress testing. Moving on to Portfolio Optimizer that has capabilities to create tens of thousands of portfolios that meet given risk constraints and automatically makes recommendations for optimum portfolios and actionable buy and sell signals. You can also use system for asset allocation across various funds and strategies, detailed performance report in easy to consume interface along with portfolio compositions, sectors, credit ratings, top holdings and their movements is also covered and tracked and updated automatically for you. Not only this, system can help you getting access to fully automated detailed financial analysis of a target company from credit risk point of view. That includes P&L, balance sheet, cash flow, as well as financial ratio analysis. It also helps in understanding various business drivers and analytics on drivers of various financial ratios like operating margins, financial leverage, etc. You can also analyze group structure, subsidiaries, and most importantly, potential related parties in a nice interactive UI. You can also leverage system for analyzing cash position and cash flows of a business, as well as forecasting cash flows and margin for the next 4 quarters.
Hello everyone, we are back again. Hope you enjoyed the demo. As you could clearly see in the product demo, the positioning of the product is very different from traditional treasury players, with heavy emphasis on trading insights and front office decision making. So for the people from VC community who might be wondering how big this can be, here is the answer. Globally, asset management industry is about $90 trillion of assets. With this, I would like to conclude this presentation. Over the last few years, we have got several awards and recognition, as well as opportunity to work with various brands globally. Join us on our mission to help you increase revenue and profits from your investment and trading book, leveraging quant and AI. Thank you so much for being a wonderful audience. I look forward to have a detailed discussion with most of you on one-on-one basis. You can reach out to me on my email ID, that is kushal@knightfintech.com. And we also look forward to host you at our virtual booth to have a next level of discussion. Thank you so much.
Thank you, Kushal. So now to our fourth fintech of the day. They are Capitalize AI, Israeli-based. They are a trading platform focused on NLP. So over to Shahar, please.
Thank you, Nick.
and thank you everyone for joining us today. I'd like to start by sharing a personal story. It was 2 years ago. I was on a family vacation, totally unaware of the markets. 3 days into it, I got a first glimpse, and I saw a strong bearish market response. It was due to an unexpected interest rate increase. And boy, did my portfolio suffer. And I remember I thought to myself that I could actually predict this kind of effect on my portfolio for these kind of market events. We all have our favorite assets. We know when they go up, when they go down, when to buy into them, and when to get out of them. But what we cannot change is the fact that we all have limited resources of time. And inevitably, we cannot completely avoid these situations. But this doesn't have to be the norm, and we are here to change that. My name is Shachar, and I'm the CEO and co-founder of Capitalized AI. Banks, brokers, exchanges, they all invest great resources on customer acquisition while offering the same investment experience. Their clients, the traders, work in a similar way. They plan their trading, they wait for the right time, and when the time is right, they either enter or exit the markets. It's a very repetitive line of work, and that is why most of them aspire to use automation in order to monitor and eventually execute their trading strategies. So what do? We are amplifying the financial institution performance by offering an investment experience like never before. For the first time, investors with zero technical skills can completely automate their trading using freestyle text. You can think of it as your personal investment assistant. You just tell him what it is you're looking for and what it is you want to do in response, and Capitalize takes it from there. Let's take my personal experience as an example. With what is now available, I could simply write, if the interest rate results are above forecast and the SPX 5-minute change is negative, then sell 100 Apple and sell 10 Amazon. Once I start it, it will be automatically translated into an algorithm and tracked 24 hours a day. So now my portfolio is protected, and now I can manage my risk more closely. But it is much more powerful than that. We can play any scenario. It could have both entry and exit conditions. And it can run once or in loop, so we can manage our investments for the long run. These could be long-term investment scenarios, or even short daily tasks. For example, between 10 a.m. and 11 a.m. Eastern Time, if Bank of America is above 26, buy 1,000 shares of it. This is something I want to do here, now, today. Something I wouldn't have any other way of automating. Making sure we don't miss out on opportunities is great. But sometimes all we need is awareness. And with Capitalized AI's smart notifications, we can set any scenario to simply send us a push notification. So, automation of trading, check. Smart notification, check. But to complete a true and holistic trading experience, we need one more thing. And that is research. With the Capitalized platform, I can perform research and analysis of my investment ideas before I apply them on my portfolio. Let's watch the following example. We wanted to see how the Australian dollar and gold correlate between each other. So we wrote the following scenario. These are the entry conditions. And these are the exit conditions. Now, instead of running this algorithm on a real account, we click the backtest button and run historical market data to show what if. What would have happened if we were to invest using this scenario? And as you can see, in the past 90 days, it generated 13 trades and 58% profit. Our technology is provided as a white label solution. We connect to the financial institution trading API and deploy a dedicated website specifically for them. The integration work is done completely by Capitalize, so they need to invest zero resources on it. Once integrated, their customers can completely automate their trading on their existing accounts. And for this to work, we require no personal information, so the customer's data privacy is always protected. There is a clear void in today's ecosystem. Some solution requires a customer to also know how to code, and others require the technical understanding. There is currently no solution out there that caters for the everyday people. And let's face it, most people are not technically oriented. I would like to share two of our success stories. We've done a pilot with FXCM. In this pilot, after connecting to their trading API, they provided an access to several hundreds of their users, and they measured the impact it had on them. And what they saw was an increase in 28%. 28% higher engagement and higher trading volumes for the entire group, and even more interesting, 210% for their power users. This group they call power users are high net worth individuals and high volume traders. Obviously, after seeing these results, we've signed the commercial agreements, and today we've deployed their dedicated website. Another success story is interactive brokers. With interactive brokers, 50% of our users trade more than 600 trades per month, and some of them trade hundreds of millions of dollars each month. Capitalize is based out of Tel Aviv, Israel. We have a strong professional team dedicated on our mission of democratizing automation of trading across the industry. Today, we already work with some of the biggest names, and I'm happy to say that many of them are joining us these days. One of our main challenges is growing the company from a 20-man operation to 2 or even 3 times that number in a short period of time. And for that reason, I consider ourselves extremely lucky to partner with Accenture. With their vast experience, we're getting some of the best advice out there. We consider Asia Pacific as our main go-to market for the following years, and we will expand our operations into the region. As such, we're also looking for local strategic investors. If you are one and you share our vision, please reach out to us. To recap, Capitalize provides research, smart notifications, and automated trading. It proved to dramatically improve the conversion of new customers, their engagement, and overall retention. I would like to thank Accenture for choosing us and providing us with this valuable opportunity. Thank you, Hoy, and thank you, Jeffrey, for making this program a reality. I would also like to thank our mentor, Jason, and our other mentors at Standard Chartered and Morgan Stanley. Thank you very much.
Great, thank you. So just a point on housekeeping. If you're raising questions in the box on your right-hand side, please can you just make sure that you enter the name of the FinTech at the top and then put some of the information in about the question that you want to raise. Thank you very much. So now to our 5th FinTech of the afternoon. I'm delighted actually to introduce Julian, who we've been helping quite closely from UVAS, which is a Singapore-based securities exchange. So Julian, over to you, please.
Thank you, Nick. Hi, I'm Julian, CEO of UVAS. We're creators of one of the most advanced securities exchanges in the world. At UVAS, we spent 3 years on research and development of exchanges. We looked at everything from NASDAQ to Euronext and all of their implementations in the wild, such as LSEG, SGX, NYSE, and many other small exchanges. We analyzed and understood several problems that are prevalent in the space. Exchanges are super expensive to operate, and they pass these costs on to issuers. The exchange's workflow contains a ton of unnecessary middlemen, creating costly and slow post-trade processes. All-in costs to keep an asset trading are on the order of 2 to 3 million, a massive sum eliminating most assets from public markets. Over 30 years, you can see the blue line. a steady decrease of public companies listed, while the green, a steady increase of companies with 500 plus staff. Why is this? Because it's very expensive. One exchange we saw bucks this trend, which is in a tiny country of Luxembourg. The listing and maintenance process for their exchange has been made cheap and streamlined. As a result, for a country of 600k citizens, 36,000 securities from 100 plus countries are listed. At Uvas, we took some of their ideas into account and massively enhanced tech to make things even cheaper and much more efficient. So what does this let us do? Our exchange is 90 to 95% cheaper than all other exchanges in the world in operating expenses. Uvas is fully backwards compatible and can plug into existing infrastructure of brokers, clients, clearing members, etc. It could, in theory, replace an existing exchange, those designed to supplement them by trading alternative assets without current markets or ones that trade OTC. Look at a study of alternative assets. The number one reason to invest in them is diversification, closely followed, of course, by high absolute returns. An exchange such as Uvas clearly allows for diversification as compared to incumbents. Incumbents mainly trade the oil and banking names and very few large-cap tech stocks. It's worth to mention some use cases. A good one's real estate. Totally liquid market, which is 2 to 3 times the size of all capital markets. Imagine trading commercial real estate as if it's bespoke REITs, and having ability to buy $1,000 worth of your neighborhood shopping mall and receive dividends when Starbucks pays rent to the shopping mall. And you can get treated the same as a large investor who purchased maybe 10 million of the same asset. There are clearly advantages such as secondary market without real estate brokers, lawyers, and other middlemen, and a premium at which liquid assets can trade when they become liquid. Clearly, nothing beats inclusiveness. A small investor would be able to invest in something that currently only large investors can invest in. This can be done with debt, equity, any other asset class. Uvas supports essentially any instrument. Another use case is private companies. Even in developed markets such as the US, only 2% of the largest companies are listed. What if a programmer with vested stock wants to, say, cash out their equity and the company wants to buy it back? Or a venture fund wants to pick up those shares. With Uvas, this can become a possibility. If you look at this comparison, we're basically trying to make the exchange accessible, affordable, and bring liquidity to things that are now private equity. Currently, all major exchanges are extremely expensive, while marketplaces of private assets don't have much of a secondary market. This is where Uvas comes in. As you can see, quite a few large companies are attempting to do what we've done, including BBVA, JP Morgan, which are trying to build a system to trade syndicated loans. Or for instance, Swiss Stock Exchange, who are essentially trying to replicate Uvas. But this is not as easy as it seems. We're firmly believers that Uvas is what exchanges of the future will look like. However, with Uvas, the future is now. The total addressable market is a complete greenfield. It's assets that currently don't trade, which is most assets. If you take just 10% of all equity, debt, commodities, and derivatives, and say 2% of real estate, as it's such a large amount, you get $100 trillion. Let's say we're lucky and eventually get to 1% of this number. It's $1 trillion market. We make money on listing fees and on trading fees. Of course, we're very market-oriented, and these fees are an approximation. If the deal size is large, the listing fees can be much smaller. However, turnover in assets that don't currently trade is where we make most of the money. I think it's important to say that this is not an MVP. If anything, we're probably the opposite, as years of engineering work has gone into making Uvas one of the most sophisticated exchanges in the world. We've looked at resiliency requirements of major world exchanges and beat them. Our trading engine is faster than NASDAQ under normal and high-stress simulating environments. And as you can see, our tech stack is top-notch, and everything is covered with tests as well as resiliency and failover measures. Of course, we've designed user-friendly UI as well as mobile app interfaces, though most institutions and market makers will likely use Fix or other API methods to interface to our exchange. This said, our UI is quite modular, enabling widget-based interfaces, easy enough for those traders used to Bloomberg Launchpad. Here you can have primary offerings, bid offer screens, depth charts, information on traded assets, and other graphs for analysis. You can view your current assets, and of course, you can customize and resize everything and save your views. We have a team of 20 engineers, most of whom built several digital asset exchanges prior to this, and are specialists in what they do. While the product is fully ready, of course, we're constantly enhancing and improving it. Lastly, I want to thank you for your time in listening to my presentation. While we're in the process of setting up our own exchange in several jurisdictions, as well as partnering with several incumbent exchanges globally to become a section of an existing exchange, we're very interested in becoming completely global. If your business is asset rich, if you're keen to operate an exchange for unusual markets or assets, please don't hesitate to reach out to me or my team at the details below. Before I go, huge thanks to everyone at the Accenture FinTech Lab for making this all happen.
Great. Thank you, Julian. So now I'd like to pass over to Flybits, based over in Canada, and they are a digital experience platform.
Thank you, Nick. Hi, my name is Federico De Simoni, and I am the Corporate Development Lead at Flybits, working on our global expansion. And I have the pleasure to be here today with my colleague Mark.
Hello, my name is Mark Reeves. I look after Flybits European operations, and I'm pleased to be here.
We've all done it. Bought a movie, a book, even groceries on apps like these, a part of the now economy, where everything is available anytime. What about banks? Banks help small businesses, families, students, good things. But when banks reach out, it feels old-fashioned. These channels are saturated. It's like sharing the road with phone bills, spam, fraud, and mom. Engagement rates, 1%. That means 99% of messages are not connecting. It's like saying, sorry, we don't really know you. There is good news. People use bank apps to check their balances and transfer money. App visits outweigh branch visits 80 to 1. 80 to 1. But people still go to the branch for financial advice and service. So what if customers could receive that personal attention on their app? Welcome to Flybits. We work with many of the world's leading brands, thought leaders, and academics. We've created a fast lane that connects you to your customers in the moments that matter. With Flybits Concierge, you can design privacy-preserving experiences that are always on, listening to when and where customers need help. Our collection of experience modules will empower your customers to buy a home, save, travel, and more.
We have created a platform called the Experience Studio that really empowers the creative units or the marketing units of a bank to create these innovations at scale. The platform is also being designed in a very vertical agnostic manner. We have customers that are building use cases and experiences for mortgages, for credit cards, for loyalty, for reminding people on their insurance policy, for telling people about what they are eligible for when they go to a retailer and they are swiping their credit card. But instead of expecting the bank to go and work with an app developer or an agency, we have provided a platform that they can think, envision, visualize, simulate, and implement these use cases at scale and bring them to their customers. We believe the banks of the future will play a very important role when it comes to the health and well-being of their customers. But there is a big difference here. Up until now, the key unit economic model of a bank was a financial instrument, such as transaction, or a mortgage, or lending money. The new unit economic of a bank will be data and how they use digital and digital channels to bring that to the market. And we are now empowering banks with a whole new ecosystem around data, not just to provide immediate financial value to their customers, but we are enabling them to partner with reciprocal entities such as corporate partners, telecom operators, supermarkets, energy companies, to all share data with each other in a very privacy-preserving manner and really position them as a leader and a concierge to be there for their customers when they really need it.
Imagine Michelle. With your banking app as a destination, she's grown to expect that it will find her deals and offers. Next time she's shopping downtown, she'll receive personalized offers from nearby shops and restaurants. On a day she prefers to shop online, she'll be reminded of card benefits like zero liability protection so she can enjoy peace of mind, knowing that she's secure from unauthorized purchases. Whether she's shopping online or in store, Michelle will receive relevant information to improve her experience as a credit card customer. Now imagine Jim, a small business owner. He manages everything from inventory to finances. With all that's going on, your app is there for him to help with his financial well-being, like notifying him when payments are due or when his small business loan is approved. Your app is there to provide useful resources and education, showing him how to bring his business online if his store's foot traffic has seen a significant reduction. No matter what a customer needs, from financial advice and special offers to credit support and mortgage advice, your app will be the destination. That builds trust, and trust delivers results like this.
Now, if you're following with us on your phone, you're going to click into the concierge embedded into that financial banking app. Now, you're going to choose a persona. These are two typical personas that you might see in your banking ecosystem today. We have a first-time homebuyer and a traveler who has a credit card. Now, what you're seeing here is a very typical banking experience when that customer is in their app. They're seeing financial information like their account balance, a product offer, and not much else. So how can we take personalization to the next level? At Flybits, we believe in going beyond banking touchpoints. As a first-time home buyer, I might be interested in more than just a mortgage offer. I might want to see mortgage education, videos, an appointment to go and see a mortgage specialist so that I'm guided throughout my mortgage journey. As a travel card holder, it's not enough to just give a product offer. I might want to know how I'm going to use that card when I'm traveling. So why not provide an offer for dining, shopping, and other experiences that can elevate that card holder to the next level? As you're seeing here, this is our idea of personalization. Two completely different experiences for two completely different personas, all while using the same digital channel that exists in your banking systems today. Now you might be wondering, how do we create this as a non-technical user or as a customer engagement team at a bank? We're going to create one with you today, live. I'm going to start with one of our biggest problem spaces in the market, and that's unifying all the different data about your customer. At Flybits, what you're able to do is unify any of these data sources, whether it's existing in your CRMs, your DMPs, or any third-party data sources that you can bring in. I'm going to start with a segment in your bank that you might already know, a frequent traveler. But we go beyond just the simple customer segment. I might want to understand, for example, my customer's monthly spend so that I can provide them the right credit card offer. On top of that, I want to make sure that I'm providing an offer for someone who has the right credit score so that they're able to take this offer and actually get a new card. Now, the power of Flybits is going beyond banking data. What I'm also able to do is connect things like network connectivity, location data, and battery level so that I know the right time to market to my customers. Now that I've created this customer situation, very unique in this situation, I'm going to create a new experience so I can provide something to you today. So what I'm going to do is take that rule that we just created for this travel offer that I'm going to give to our travelers in the room, and I'm going to select some content that I've already pre-created. So this travel card upgrade, because you've been spending a lot, you're a frequent traveler, and a nice welcome bonus for points that you can earn. Now, with a click of a button, I'm able to create this experience. So what we're going to do is now activate this experience. As you're seeing here, each one of these cards is an experience that we're going to activate into the market. Now, when I've taken that experience, every single person that falls under that persona is going to get this travel card offer.
So now you've seen a quick preview of the Flybits product. Just by way of background, Flybits is a company. It's Canadian originated, started about 10 years ago. We've got a very strong investor group, a good early client group. We pride ourselves on being formed by academics and driven by academics. We have a series of patents that underpin our excellent technology. Fed, over to you.
Thank you, Mark. And we want to thank everyone for this amazing experience. For us, being part of the FinTech Innovation Lab Asia Pacific 2020 cohort has been a great experience. We want to thank all the financial institutions that dedicate time to us and our advisor. In the last 8 weeks, we managed to meet with more than 15 financial institutions, spend a lot of time on refining the product, establish our go-to-market, and do the tweaks necessary to land nicely the product in the Asia-Pacific region. As we move forward to 2021, we look forward to welcome our first customer in the region, and we are very excited to open our office in Singapore.
The now economy. With Flybits, you can be in the moments that matter.
Thank you very much. Now I'd like to pass over to Panos, based over in the UK, I believe, to give us a bit more information about Spin Analytics. They are a credit risk management company. Panos, over to you, please.
Thank you, Nick. Hello, ladies and gentlemen. My name is Panos, and I'm the CEO and founder of Spin Analytics. 12 years ago, few people were thinking about risk or bank regulations. Today, credit risk management has become a major priority for the global banking industry, and COVID-19 has created an even bigger challenge. The big challenge is how to develop fast, high-quality credit risk models. Behind each credit product or loan, there is one or more models. Banks use thousands of models which are still developed manually. The average time to develop a model is at least 6 to 9 months, and the average cost starts from hundreds of thousands for every model. We are an experienced team of bankers and credit risk modelers. We have been developing models for the last 30 years. Our CTO is one of the best credit risk modelers in Europe. Our Chief Operating Officer, until last year, he was a global head of risk analytics for Standard Chartered, and before that, he was the Chief Model Risk Officer for Bank of America. I would like to present you Risk Robot. Risk Robot completely automates the manual process of developing and validating regulatory banking models. It reduces the time more than 90% and the cost more than 70% and works globally. It applies digital transformation in regulatory credit risk modeling and follows all the global banking regulations like Basel III, IFRS 9, stress testing, and more. Risk Robot applies to banks, but also it applies to regulators and auditors, as it's the must-have software application which creates agility, compliance, automation, model risk, auditability, streamline, and time to market. But let me show you how this engine works. First, we ingest any kind of banking data, either internally or external from the bank. And then the machine applies all the banking regulations like Basel III or IFRS 9 and the best-in-class methodologies. And it cleans, completely automated all the data. It develops or validates the model and writes the whole documentation. And all of them in minutes instead of months. We are targeting to augment with the current credit risk modeling team at any bank globally and create efficiency for projects like model development, validation, stress testing, capital adequacy reporting, IFRS 9, and so on. We are going from the current tools, which are all generic, to a new era where a factory, which is Risk Robot, can develop unlimited number of models like PD, LGD, EAD, and so on. This is a software that applies to the whole bank, and a lot of the stakeholders are interested to know that it works internally, because the benefits are for all the bank. For the CRO, the model risk management, validation, regulatory reporting, auditors, even the CEO who wants to knows what can happen in a different scenario, how fast they can do stress testing. Risk Robot is a state-of-the-art application that covers end-to-end credit risk modeling and management. An advanced authentication and authorization system handles user access to data and functionality and fits perfectly with the multi-tenant, multi-workflow, and multi-project nature of Risk Robot. It is even mobile-friendly. We have developed dummy data, and we can present you a full functional demo where we can build a PD in a couple of minutes. A single installation can serve multiple separated entities, such as subsidiaries, business units, or divisions. Risk Robot supports multiple credit portfolios per tenant and multiple workflows per portfolio, application scorecards, development of behavioral BT or LGD or EAD models, validation of those models, portfolio stress testing, and portfolio evaluation are some indicative examples of workflow types. It should be noted that workflows are fully configurable and customizable to reflect the bank's policies and practices. All it takes to initiate a new project are a few clicks to select portfolio and workflow, and a few keystrokes to input a short description. Completing a project needs nothing more than the user to follow the navigation plan shown in the left panel of the UI. Editing, adding, and manipulating models features were never simpler, even now that with COVID-19, banks have to add more features. Risk Robot can actually support them because it can automatically recognize potential new fields and raises warnings to the user with suggestions for their most appropriate treatment. But a modeler can make any combination of fields to compose new features or reject suggested in minutes. No more IT involvement and no back and forth to ensure an accurate calculation under all possible conditions. Risk Robot supports all modern, well-tested and broadly used and accepted by regulators methodologies and techniques, and ensures that they always used under the prerequisite assumptions. After each workflow step, a report is available for the user to check the results in detail, and this report is the report which goes to the regulators or the auditors. It's an advanced software which has been tested globally, and it works. And we would like to invite you to test it with your own dummy data or synthetic data or real data if you want, because we can do a POC in 2 only days. Risk Robot can develop automated regulatory documentation, which is a must-have, and usually it's a document that can be produced by the software in a couple of minutes, and it is a description of the whole process. This is why we call it explainable AI. It's a SaaS pricing model, unlimited support of languages, and it can work in the cloud or on-premise. We have been very active with global recognition in 3 continents, and last year only under the COVID situation, we succeeded to even be accepted by regulators like Bundesbank. We have won more than 40 global FinTech Director awards, with a lot of them from big banks, tier 1 size. Our global board of advisors consists of senior bankers that are active and they know what is going on inside the bank, and they support us in our strategy. We have clients and partners in 3 continents. We have tested the software with tier 1 banks that are some of the most innovative players in the market. We have been also upgraded during the last months we have been upgraded at the highest point with a global co-sell agreement with Microsoft, which works perfectly for banks and POCs. We have already a presence in multiple countries, more than 25 already, and this is growing because there are 20,000 banks that need the same software. And we have a current pipeline in more than 3 continents, which is increasing. And we would like you to explore the following milestones. For banks, you can try before you buy. Now we have automated everything. You can buy a POC through a private offer with 1 click from Azure Marketplace, and we will deliver you with your own, by using your own tokenized data, in only 2 days, a full regulatory credit risk model. Please ask the Accenture team to support you. For the new partners, we are opening a new office in Hong Kong, and we are looking for support in our expansion in APAC. Please send us your email. And for the new investors, we would like to inform you that we are planning a new fundraising round which starts with the new year, and we'll be happy to have you in our cap table. I would like to thank you for your time today. Risk Robot can increase your speed and efficiencies, and this is something that actually works globally. Thank you very much.
Thank you, Panos. So just a reminder, when you have questions, you can raise them in the box on the right-hand side. And then if you want to book time with any of the FinTechs, you can see just in the above, you can click on the FinTech piece, and then you're able to select a 15 or 30-minute slot, depending on how long you'd like to take with them. So now I'd like to introduce our 8th FinTech of the day, Staple. And I'll pass it over to Ben in Singapore to talk a little bit about their company who extract information from documents. Over to you, please, Ben.
Thanks, Nick. Hi, I'm Ben, CEO and co-founder of Staple. Staple is a Singapore-based AI company developing cognitive technology to automate data capture and data entry at scale for financial institutions. Our tech can read, interpret, and extract structured data from any document, regardless of its layout or language.
The problem that we're focused on is a common one across many industries, but it's particularly prevalent in banking and financial services. See, financial institutions rely on a latticework of documentation from multiple sources in and across multiple systems. And we believe that using highly skilled, talented employees to manage data entry, extraction, and processing is a waste of valuable resources. In fact, by 2025, it's estimated that businesses will spend more than $76 billion each year on data capture and data processing services. And a large chunk of that is in Asia. In the past, businesses have turned to OCR, optical character recognition, to help streamline this data processing problem. And OCR is old technology, and it's all very well and good if you're using it to process documents like this, and only this. But what if you're dealing with documents like this? Or this? That's where OCR starts to break down. OCR was developed to read long-form documents, like books and manuscripts. It doesn't discriminate between which data points are important, which data points are not important. It simply converts an image into text. Now contrast that with, on the right, how a human looks at a financial document. Humans don't read these documents like books. We focus on the data points that are important, the data points that are relevant, and the data that matters. And it's precisely this very human approach that we've taken in developing our solution, which combines computer vision, OCR, natural language processing, and machine learning to deliver a superior experience and superior performance over incumbent technology. This is a sample of how our system performs out of the box. These results are from our API without any user interface, and we haven't added these highlights. These highlights are added by our system to illustrate to us and to users what it considers to be important. You'll note that we can do this in a number of file types, including PDF, PNG, and photos. Now, these documents are relatively straightforward invoices and purchase orders, but we can do the same thing for other document types also. We can even extract data from documents as complex as technical drawings. Now, this may not be relevant to a financial services use case, but it illustrates to you the breadth of our capability and the depth of our technology.
Staple offers an intuitive user interface, allowing users to view the extracted structured data alongside the original source document. And as you can see, despite changes in layouts and styles, our technology can identify variations in layout and still extract the relevant data points. Linkages can be made between the original source data point and the structured data shown on the left. We also have Smart Table functionality, allowing our system to extract relevant data from tabulated data. Now, this is applicable to invoices as well as many other document types. I could show you financial statements. I could show you other document types, but I only have time for a couple. So I'll show also utility bills in Vietnamese for a challenge. And you can see these are also in varied formats, different styles, and different file types, photographs, PDFs, and PNGs. And again, the sidebar with structured data has dynamically changed to extract the relevant data points from this document.
We're building the underlying AI data capture layer for banking and financial services. The system that can convert human-readable documents into machine-readable data, which then cleans, classifies, and matches that data across the multiple systems that FIs rely upon. We're already working with a global bank, as well as a Big Four accounting firm, and multiple other customers across Asia. Now, there are many companies developing machine learning-led solutions in this space. So what makes Staple so different? Staple is particularly focused on Asian language script recognition and extraction, something that few other companies do. Traditionally, OCR and machine learning-led solutions have been built on English and Latin character text extraction. But in this part of the world, Asian language extraction has been particularly underserved. To realize this ambition, we have the team to deliver. Our tech team is led by 2 PhD computer scientists, Josh and Ashma, with expertise in machine learning, computer vision, cryptography, and physics. Hannah Tran has recently joined us from Gartner as an ex-strategic account director. And I, Ben, have a background in financial services and consulting with more than 10 years at KPMG. Our experience during the FinTech Innovation Lab has been invaluable. During the program, we've made a number of enhancements to our product, including support for new languages and the ability for users to train their own machine learning models with no code and with no outside support from the Staple tech team. We forged new partnerships with SAP, Concur, and IBM. We've gleaned extremely valuable feedback from many key stakeholders at financial institutions, particularly partners of the FinTech Innovation Lab program. And we're deeply, deeply appreciative for that. On top of that, we've honed and developed a number of soft skills, including communication, business development, and sales strategies. In the near future, we're continuing to enhance our existing product offering We're adding support for new languages and refining the capabilities for our existing language support. We're building the ability to match and reconcile data points across multiple document streams, as well as data points within other systems at an FI. We continue to make general tech improvements, enhancing our accuracy, enhancing our speed and performance. We are looking to fundraise in the first 6 months of 2021, and of course, we are interested in exploring opportunities for pilots and POCs with interested financial institutions, particularly those who operate across multiple jurisdictions in Asia. So please get in touch if you're interested.
Thanks very much for your attention. I hope you've enjoyed it. And again, I'd like to convey our sincere appreciation to the FinTech Lab, to Accenture, to the corporate partners, and to the financial institutions for having us on board in this amazing program. We've taken away many, many valuable insights and lessons to help Staple on its growth journey. Thank you again.
Thank you. Now I'd like to introduce Simbo, and Lawrence is going to walk you through and tell you a little bit about their digital insurance platform.
Thank you very much for the kind introduction, Nick. Hi there, my name is Lawrence Kopelar, CEO for Simbo in Singapore. And as an insurtech, we focus all our efforts into digital insurance distribution. If you look at the modality of an insurance purchase, digital is at this stage still a very small part, and majority of the advisory still happens face-to-face. Traditional channels have been brokers, banks, or direct, but the majority of the insurance distribution and channels are still led through agency businesses. What are some of the key common challenges for insurance advisors? Firstly, they face a lot of paperwork and manual administration, often manual, often repetitive. And it takes a time away from high valued activities such as client advisory and sales support. Secondly, for most of the insurance advisors, there's a limitations to their own network and their ability to sell beyond their primary network. As a result of that, they struggle to make their income generating activities in sustainable business, and that often has led to attrition and loss of productivity. And thirdly, insurance industry has typically seen limited engagements, and same is the case for insurance advisors, making it very hard to take the engagement beyond the two typical engagement points of a client onboarding and or the claims payment, thereby leaving a lost opportunities for cross-sell, upsell, or over customer satisfaction opportunities. Simbo is solving this problem by offering insurance agents a digital ecosystem of support tools. We place the insurance agent in the middle and enable them with a number of different tools, such as agent KYC, allowing for a quick 50-minute onboarding process, which typically takes up to 72 hours. We provide them with sales support tools, with teleconsultation and video conferencing tools, payment integration, training and education to keep them abreast of product features, enhancements, and overall continuous professional development tools. And more than anything, we provide them with a transaction platform that allows them to advise their clients and transact it on the spot and immediately. We do so by providing them an online quotation engine and a comparison tool, so they are able to advise their clients regardless of insurance product. As an ongoing effort to service existing and new clients, inbuilt CRM tools and communication layers allows them to be nimble and efficiently service their customer base. But not only for existing clients, a big pain point is about prospecting and being able to serve new clients and new client bases. So the proprietary application has lead generation tools that allows them to quickly assess and scale their own business opportunity beyond their primary networks. Tools such as business card sharing, a vehicle tracking tool, and risk meters are all supplementary tools to help them service their clients better. Now let me take you through an example of Agent Jane, a new advisor who just joined Simbo. She's able to access a number of insurance products such as life and health and property and casualty, and has access to a number of lead generation tools such as the vehicle tracking tool, which is an inbuilt OCR component enabling her to quickly generate a quote for motor insurance policies. By taking a photo of a license plate, which are on the back of third-party integrations and public transport data, she is able to generate a quotation for a customer without the need of entering a lot of details manually, except for the validation of these details. She's able to see the make and model of the car, in this case a Ford Fiesta, the engine size, and typically covers all the relevant information that is needed in order for an underwriter to provide a quotation on motor insurance. In this case, she has access to a number of insurance products and is able to evaluate what is the right product for a customer. She can look at a side-by-side comparison, add in certain extensions where needed, and able to conclude the transaction on the spot. So who is Simbo? We're a digital insurance distribution platform that have been operational since 2017, largely working across Southeast and South Asia with offices across Singapore, Malaysia, and India. We're a Series A InsurTech understaffed across those three countries. We've partnered with numerous reputable insurance companies and other brands. Typically, we work across a number of insurance categories, conventional categories such as general insurance and life and health, but also bite-sized innovative insurance products that we brought into market. So far, our platform has reached 1 million end customers, has been used by 46,000 agents, and we've been able to onboard new agents within 50 minutes, leaving the platform to issue 100,000 policies on a monthly basis. We have a dual business model, which means that in some of the markets, we actually operate our own platform in a licensed, regulated environment, such as India, where we bring these platforms into market. So for example, in India, we have operating experience across the last 2.5 years, where we've signed up 46,000 agents, whereby these are virtually engaged out of one office across Mumbai, indicated with a yellow pin here on the map, but where the agency force is spread across the countries in rural places, indicated in the blue pins on the map. Secondly, and leveraging on our operational digital insurance distribution experience, we've been able to offer our white label platform for front and middleware purposes to insurance incumbents such as AXA, Sompo, MSG, and Zurich in those markets where we don't have regulatory licenses. This approach has led to external recognition. For example, Singapore Business Review had awarded the Digital Insurance Broker Award for 2020 to Simbo, recognizing our innovative approach to digital insurance distribution. As a Series A InsurTech, we received institutional backing from 5 renowned institutional investors: Integra Partners, Credit Ease, Insignia Ventures, AJ Capital, and Think Investments. The leadership team comprises of people from the insurance domain as well as the technology world. We understand the nuances and the pain points from both insurance domain as well as the technology capabilities. If you have any further questions, please feel free to reach out to me. My contact details are here, and I would very much welcome a follow-up conversation with you. Thank you.
Thank you, Lawrence. So now we come on to our final FinTech of the afternoon. It is Fido, based over in India, and they assess insurance risk. And Prasant, pass it over to you, please, for our final FinTech of the day.
Thank you, Nick. My name is Prashant, and I represent Fido, a cutting-edge insurtech player. The world is changing so fast, and the insurers must deliver better shopping experience, much more than their products may offer right now. The only way to do this is to use a smart, data-driven platform to create personalized insurance products. We have demonstrated a 3% reduction in loss ratios and 30% savings in operating costs with the insurance companies we partner with. The secret sauce behind this is our proprietary algorithm, the Fido score, which is similar to a TransUnion credit score used in a financial transaction. The Fido score predicts the future health risk of an individual indicating her likelihood of getting diabetes and other lifestyle diseases, and what is her propensity to incur a medical expense in the next few years. The FIDO score has been developed by medical professionals and data scientists using 250 plus medical studies, 2000 plus quality controlled academic and research documents from all over the world, and analyzing over 50 million global records, including 1.5 million health claims. Let us see how FIDO adds value to the insurers along the customer journey. Starting with the scanning of her face to detect her health risk, underwriting dynamically based on her health profile, managing her health through intelligent insights, and to a seamless claim process if required. FIDO is part of every member's insurance journey. Why is this important at this time? Recent Workforce 2025 research by Accenture says, over the next 7 years, augmentation in insurance process could provide productivity gains of up to 37 billion USD to the insurance companies. Those insurers who doesn't innovate and adapt will be history. Team FIDO brings together more than 100 man-years of insurance, innovation, and deep technology, supported by data scientists, industry veterans, and medical professionals all over the world. We have been recognized and featured in multiple global forums, including Accenture Health Tech Innovation Challenge, NASSCOM, Tokyo Metropolitan Government, etc. FIDO as a company believes in using data and technology to reducing out-of-pocket expenditures of individuals and making insurance accessible, affordable, and personalized. How do we compare against the existing players? The market is full of software developing companies, analytics consultancies, and generic machine learning companies. FIDO is different from all of them through our expertise in health risk prediction, the largest and cleanest lifestyle health database, and a clear focus on the health and life insurance industry. Adding to it, our cutting-edge technology, including computer vision, neural networks, and natural language processing. We bring the latest of technology and analytics into the insurance underwriting. Our business model is clear and result-oriented in a very flexible pay-as-you-go payment schedule and could be deployed within the next few weeks. Let's get into a demo. You can see the age, gender, BMI, smoking status, and the location computed automatically. And now we submit it to see the underwriting decision. Here you can see the score of 668, which is considered to be a very healthy score. Any FIDO score above 600 is considered to be healthy. You can also see on your left-hand side bottom the historical decisions in similar cases which have happened over the past. On the right side top corner, you can see the portfolio and how this particular application is affecting the portfolio performance. On the bottom right, you can also see the average claims and the expected claims for that individual compared to his demography. The system is finding this person to be a healthy individual, so no tests are being prescribed here. Well, that's all we have for today. Thank you for listening to us.
All right, great stuff. Thank you, Prasant. So that comes to the end of our individual fintech. So we've had 10 minutes with each of them. And now we're moving on to our final item for the day, which is a panel discussion, which will be focused on the future of banking. So I'd like to introduce you to Fergus Gordon, who is our banking industry lead across growth markets. So Fergus, over to you for what I hope will be a very good panel discussion.
Well, thank you very much, everyone, for joining us for our 2020 Demo Day panel discussion. Today's discussion is going to be around the future of banking. I'm Fergus Gordon. I'm a Managing Director with Accenture, and I also lead our banking industry practice across what we call growth markets, which is Asia Pacific, Latin America, Middle East, and India. Today, we have three fantastic panelists who's going to share some very insightful and unique points of view around the future of banking, whether that be virtual banking or digital banking or incumbent banking. And what I'd like to do is just to have the presenters introduce themselves. So first off, Edwin, could you perhaps do an introduction of yourself?
Sure. Thank you very much, and a very warm welcome, everybody. My name is Edwin, and I work at Mox Bank, and I help with our corporate affairs, strategy, and partnership at Mox.
Thanks, Edwin. Philip, perhaps you can go next.
Sure. Hi, everyone. My name is Philip Chu. I'm a managing director at Grab Financial Group. And in Grab, I am in charge of new businesses, investments in new areas, as well as the current youngest verticals that we have currently, which would include insurance, wealth, and also our payments gateway business.
Thanks very much, Philip. Look forward to hearing from you. And Nike, perhaps if you could do the honors, thank you.
Sure. Hi, everyone. I'm Nike Kong, Chief Information Officer of Hang Seng Bank, and I cover technology in Hang Seng, and we have various retail, commercial, and investment banking businesses, and we also cover Hang Seng indices as well as part of my role.
Great. Thank you very much, Nike. So I'm excited. I think we have a great mix of panelists from incumbent bank, a new virtual bank in Hong Kong, and then a big tech entrance into the financial services world. So I'm looking forward to having these three unique perspectives play out through the panel. So maybe we can get started with some of the questions, if that's okay. So I'll throw it open to the group, but 2020 has been a year of massive uncertainty. We've had COVID-19, there's been political tensions, it's been an election year in the US, we've got changing regulatory environment and new competition in many countries across Asia Pacific. So I'd like to ask the panel to start with, what's been the biggest challenge that you've had to overcome in 2020 and how have you gone about responding? Maybe we can start with Nike, if that's okay.
Certainly, there are a lot of what I call unprecedented things happen in the last year. But within that, probably something which is more prominent to us is COVID, I guess. And from the COVID perspective, how do we serve the customer within the bank? How do we help in terms of the community? And how do we take care of our colleagues so that they can carry on supporting the business? I guess first and foremost is obviously health and safety of our customer and our employees. And we're doing quite a lot in terms of on that front. In my role from a technology perspective, there is a lot going on in terms of COVID. And you guys will know there is a very sharp shift into the digital space. Digital volume has increased quite a lot. The branch people are going less into the branches. And as a result, we're seeing digital going up. Our mobile transaction volume has grown about 70% in the last 10 months. So that's quite a lot. And on our side, luckily, we plan quite well in terms of capacity, taking care of that. So that's okay. From a community perspective, we are doing what we need to do to help everyone in Hong Kong as best we can. We are a community bank in Hong Kong, so we're doing the $10,000 distribution earlier with the other banks and the government. We're doing the relief program to help our corporate customer and SME customer. And we're also doing we're doing a few things in terms of the community, like giving out computers to underprivileged children, etc. From an employee perspective, what we need to do, I guess, turning around after Chinese New Year is how do we enable the business, right? On that front, we're doing a lot from a technology perspective. Luckily, in 1 to 2 months, we get a lot of our colleagues who weren't able to work from home earlier to be able to work from home. We achieve about 85% very quickly in that space. And I guess we did quite a lot in helping. You imagine like a trader with many screens dealing dealer board in front of them, recording trading on the other side, and we managed to get them like working from home with some constraint, obviously, but that went on quite well. So I guess a lot has happened on that front from a banking and perspective in terms of helping a customer and helping our staff. But I guess compared to the hospital and the medical sector, that's tiny. What is happening out there is amazing, and these people are moving mountains to keep everyone healthy and safe.
Absolutely, couldn't agree with you more on that last piece. I thought it was interesting we touched on the need to scale your infrastructure given the jump up in mobile volumes and things like that. I was wondering if we turn over perhaps to one of the new entrants. So Mox, Edwin, how are you seeing things? Because there's a completely different view as a neobank without perhaps some of the need to scale or the legacy constraints that, say, Nike may face in his business. So I'd be interested to get your thoughts.
I think our challenge has been a little bit different. In many ways, it's probably similar to what a lot of the participants at the Accenture FinTech Innovation Lab has experienced. So our biggest challenge has really been building a bank from scratch in the last 18 months. And this is kind of given the external environment and also some of the challenges that we've seen in Hong Kong. And I think it really is testament to kind of the resilience. And I'd actually say more broadly to Hong Kong, because if you think about virtual banks, so Mox is one of the 8 virtual banks, but the fact that Hong Kong as a whole kind of being the first market in the region to really introduce virtual banks, and for 7 of them to kind of come to life this year. And then the last one is, from what I understand, very, very close in kind of that final stages of pilot testing. It's really, really encouraging. So for us, the challenge has been, not just building a bank from scratch, but how do you build a bank from scratch from home? And I think that's been a massive learning, which we ourselves have had to go through.
Thanks, Edwin. And then Philip, being based in Singapore, would you characterize things as any different from a Singapore or from a Grab perspective?
Well, I think it's interesting. We being Grab, we actually live in a very fortunate part, having our headquarters in Singapore. It's one of the city-states that has things largely under control. But I think as I listened to both Nike and Edwin share their experiences, Grab has lived both sides through, because we are neither too small nor neither too big. And I think what is really important that we were concerned about at the beginning of COVID was, first of all, how interesting it is that we're going through this whole global pandemic, global experience. That's one part of how we thought about it, the possible changes that will come our way. And on the other side of it, we were also preparing for the worst, because it was very difficult to figure out what kind of second, third, fourth order effects that could happen, that could affect our businesses. And so to a large degree, some things came out as you would expect. For our transport, of course, it went down significantly in the beginning of the crisis. And of course, for food, it was as expected, accelerated up way higher. And our digital payments business, of course, went up also. I think it's of the same order as what Nike had said. For us, it's around 15 to 20%, depending on how you measure it. And also, as we saw that, we had to make sure that we were prepared for the worst possible storms. So there was a lot of cost cuttings that we had to go through, just to be more efficient, to be more prepared for various scenarios. And I think right now, given where we are in the crisis, we have visibility in where we will be likely in 2021 and 2022. And it's all about accelerating out of the crisis at the moment.
That's interesting, and that sort of leads me on to the next question here, which I think is we just spoke about the challenges, but perhaps with a vaccine on the horizon, or on the near horizon, hopefully, what are the opportunities that you see, coming out of the pandemic, and given the environment that we're working in at the moment? Maybe Philip, you can just touch on that to double click into there.
Sure. I think with hindsight right now, we can see that basically the world has gone through a time machine experience. I think in terms of how we work with each other and how we control the way we manage our finances, manage our economic lives, it is possible for a part of our population to work digitally. And so when you have that, that means that there are certain parts of our businesses that have been accelerated way into the future. And so that means that, for instance, we are very much looking forward to our, hopefully, our ability to get the full digital bank license here in Singapore. And we are looking forward to executing on that starting in a few months from now, if we are so lucky as to get the approval. And also other parts of our businesses, like, for instance, our insurance business. It's largely a distribution business at the moment. And in the last month, we've gone from 1 million MAU to 2 million MAU to 3 million MAU just recently. And so the acceleration is very, very palpable, and I'm sure the other panelists are seeing that in their businesses too.
Great, thank you. Nike, from Hang Seng's perspective, how do you see what's the opportunity that you see in the market, particularly given rise with the neobanks and the competitive situation and the additional HKMA smart banking regulations coming in?
Maybe talk a little bit about what happened after COVID, and then I'll mention about the Hong Kong MA, the open banking initiative as well. I think those two are related. Certainly, I mentioned earlier, everyone moving into digital a lot more flexibly. I guess there is a kind of new way of working, right? So COVID is probably mostly bad, but there are some new way of working. So like ourselves doing this conference, we would have been in a conference event in a hall, sitting on the stage with a lot of audiences in the past. Now everything is done remotely on video conferences. I had a virtual offsite last week with my regional group team, and usually there were people traveling in, right? And now we do 3 days of 15 hours, and then you just go and lunch and go home, like what you do in normal days. So there's certainly a new way of working in terms of more flexible. And as a result of that, what is happening out there with the Hong Kong MA open banking initiative, with the virtual bank coming in, I think it's a good thing from a customer perspective. So you have a choice now. After we go back to the new normal, then a customer can choose to go into branches that they want. They can call center, or they can go online, and people are a lot more flexible going online. The regulator are more flexible as well, to allowing things to be done online with certain level of control that you need to put in. At the beginning, you will remember once COVID started, there were a lot of like queries around security aspect on video conferences, right? So how secure these events are, or how secure that you are in terms of holding a meeting remotely on a conference call or even on an audio call. So, but now people are seeing like kind of accepting this, and obviously there are things that are being done at the same time to protect the customer and protect your data as well. So I think it's moving on in a positive way in terms of giving customer a lot more choices than before.
Thanks, Nike. And then obviously, Edwin, Mox is now live. I think I saw your infographic where you've got up to thousands and thousands of people and customers now. How do you see the opportunity for Mox over the next 12 months?
Well, to be fair, it really builds on what Philip and Nike talked about, and it is that acceleration of the digitization that we're seeing. So to your point, and I think whether it's us or the industry, we are seeing a high level of adoption rate. So for us in our first month, we had about 35,000 customers, good inflow of deposits, people using banking differently, kind of building these sub accounts called goals, etc. So all of that is very, very encouraging. And if you look at kind of that fast forward trend, because historically Hong Kong, and it goes back a little bit to also kind of why virtual banks were built and the research that we kind of very initially started with, is while Hong Kong's product sophistication, particularly from a banking lens, is very developed, that digital lens is probably an area that can be improved. And I think that's what you're trying to see in that space. And then you also see people being a lot more comfortable with it. So historically, I think a lot of people would say cash is king in Hong Kong because people really need cash, because at the end of the day, even taxis in Hong Kong, you still need cash. Tunnels, like some tunnels, you still need to pay with cash. And you almost challenge yourself, like, why? Like, or checks. Like, I don't know if anyone's experienced this, like with schools, but the typical checks you still write might be to for school buses, etc. But again, like why? Like, and why go through that process? So there is that notion, and I think at least this is something that we really deeply believe in, and it really goes back to that kind of adoption. So if I'm honest, virtual banks right now, the earlier stat shared by the financial secretary was around 300,000 customers have it. So by and large, a lot of people in Hong Kong still don't have it, but we really think it will be a trend, kind of like your smartphone. So I don't know how many people use kind of like the first iPhone 1 or the second iPhones or something, but by the third or the fourth, like as long as there was like an aha or eureka moment where people just feel like, hey, I get what this virtual bank thing is all about. This helps me with this or that, or likewise, that transition from your usual taxi to Grab. Like as long as people get like, hey, I now understand the benefit it brings to me, then I think you're going to see that adoption continue to accelerate.
That's interesting.
Maybe just to add to that, I think it's a very positive thing from a customer perspective, because the virtual bank like Mox bring along to the industry a new challenge in terms of the customer experience, right? So as Edwin said, maybe people will be more willingly to open a lot more bank accounts. But certainly it drive us to do more as well as a incumbent bank, as the industry is just doing more in terms of helping the customer, particularly digitally.
Thanks, Mikey. I was just going to say, I'm sure Philip was excited by the fact that in Hong Kong you still have to pay with cash, and there's plenty of opportunity if the regulators allow you to digitise that processes. But I think it's interesting that we've been speaking to a number of players in the industry in financial services and non-financial services, and digitisation has been a big push for a relatively long time now in the industry, and there's been a real intent to digitise customer journeys and those sorts of things. But we've started to hear both from the players and from other industry participants around this concept of invisible banking that takes digitisation and plugs in data and puts that into ecosystems and platforms that create sort of embedded financial services across traditional and non-traditional players. I'd be interested to get your thoughts as to, one, is this something that you would agree with, you think this is a trend? And two, what do you have to get right to win in that environment, or winning, if that's the case? Maybe I can go back to you, Nike, if that's okay. From an incumbent perspective, what are your thoughts on that?
Sure. I think that's very real. I think in terms of what people talk about invisible banking 4.0, it is definitely coming. And in the past, people go into banks. Now people still go to bank in terms of like going into internet banking off the bank or go into the bank's mobile app. In the future, what we see is that banking need to be in the customer's lifestyle. So it need to be available to how the customer want it, where they see it, how they want to do it, and where they want to do it. So it need to be integrated into the customer's lifestyle. And in the past, we say customer is king. And in our mind, I think we can customer experience is king in the future. So whoever can offer that integration into the individual's lifestyle will be the winner going forward. So from a bank's perspective, we probably need to start thinking about how do we create that ecosystem with our partner, not just doing banking with banking, but the ecosystem will open up, and therefore open banking, API, those become more important going forward.
Thanks. Phil, going over to perhaps the Grab perspective as a big tech coming more from a platform history, how do you think the embedded financial services plays into that? And how do you think about being successful in that environment?
Well, I would say that Nike's response, he could very well be a Grab person right there. Because that is how we look at things, actually. And I think what's interesting for me is that when I hear invisible banking and so on, and there was a lot of effort that's been put into putting technology behind banking. And to me, I think in retrospect, it feels a little bit more like a tool looking for a problem. Because ultimately, what we want to do is to make people's lives easier. And the question really that's in front of us is where are people now? Where are people hanging out? Where are people interacting? Where are people finding what they need to do to run their normal lives every day? If you were creating a bank 200 years ago, you would go to where the ports are. You would go to where the rivers are meeting and where there's good transportation. You would go where there is an ability to have an accumulation of people in front of you. And you would then build edifices that project security and project safety. And you would create from there the idea of a financial intermediary that could make transactions between merchants and suppliers easy. You can create a lot of what we call the modern economy from that. And if you're looking for banking now, ultimately, let's just drop the terms, right? Ultimately, it's talking about one party making an agreement with another party and having that contractually enforced for some cash flow or some product flowing. That's literally what we're doing. And if you're able to do that in a scalable fashion across hundreds of millions of people, and those hundreds of millions of people, billions of people love to be there, that's where I think this idea of embedded finance, I would prefer just thinking of how do I enable the actors in this digital real estate to be able to transact reliably. We already have an instance of this in the world, China. You look over there, you see probably a 60% picture of that vision of the world. And I think it's us in the rest of the parts of the world, especially in Asia, ex-China, trying to find our way forward there, given our regulatory constraints, given our societal constraints and what we're looking at. So Grab itself is looking at itself more as an economy. So I think increasingly you'll hear this term called Grab economy, but what is it really? It's just really an electronic connection of the folks who get services from within Grab. So we started with transport 8 years ago, and then we built food over the last 4 years. We started our journey in financial services a little bit more than 3 years, depending on how you count on it. We don't think our financial services journey will end in the next 3 to 4 years. It'll probably take us some time because, as we're all very aware on this panel, that industry is very deep and very wide. There are many, many things that can be done from within Grab. So we look upon invisible banking as truly an embodiment of how you bring financial services into a digital economy.
It's a very interesting answer. I really like the analogy around building a bank around the ports, say 200 years ago, and what that means today. So if you think about how where people are gathering today, it is around these big platforms. How do you then, and maybe I can pass this one off to Edwin, how do you then think about acquiring the customers onto the platform to be able to activate the customers in terms of what, enabling them in their interactions?
Yeah, well, because to be fair, I mean, apart from that wonderful port analogy, I also really like the tools looking for a problem, because I can more share from our experience, and then we can kind of dive from there. But how we really kind of started the whole thing was, I mean, before we did any form of coding, was just talk to customers. So we spoke to 2,000 plus customers, did deep ethnographic research, really around kind of pain points and jobs to be done. And so many of these are very obvious, like in terms of the general feedback from banks was really, banks in Hong Kong are good, like for sure. And they're safe. They kind of compared them to an elephant. But there were just some areas that they didn't quite help them on. Like, for example, there was a lot of feedback around financial planning. Like they really, banks couldn't quite help them kind of plan for the future, and how could we kind of go about that. Then, I mean, some of the other pain points were also quite partly comical, partly obvious. But for example, there was always a feeling of, you get discounted for your loyalty. So kind of the longer you stayed with the bank, there was a bit of there was a feeling of the account opening process was a little bit challenging, particularly for non-locals. Like if you didn't have your permanent address in Hong Kong, that was a real pain point where they'd explain, like a lot of times it'd take, 45 minutes to go to branch. If you didn't have all your papers there, it'd take 2-3 minutes. So kind of that's really almost the genesis of where we all started off. And for us, it was all around, if we can redesign a bank from scratch, and that was our opportunity, how can we rethink all of these experiences to make sure that customers do enjoy the experience? I don't know who gave this quote, but I believe it is somewhere in there, but it was something along the lines of, a lot of people in the world probably prefer to go to their dentist than to go to a bank. And part of it goes back to that experience. Like, when was the last time you really thought, and sorry, like, to be fair, I've worked 15, 16 years in Standard Chartered, so I probably need to stop rambling on this point as well. But it's, when was the last time you had a really, really delightful banking experience that you'd be like really excited to share with friends and families? That's something that is different. And that really, even for ourselves, is something like that we challenge ourselves on, in terms of, what would it be that would make someone just proud to share that experience. And that in a way is what we've seen in other virtual banks, by the way, so across the world. So some of the examples we give is, at least when we did our research, was relatively few people would really go and say, I love ABC Retail Bank, whichever it might be. A lot of people might be, I love Apple, I love Google, etc. But if you look across the world, there are people that say, I love Mons, or I love N26, or I love, and they just like what they stand for. They like how they live experience, and that's kind of what we're going for. On the customer front, this one's so key as well. So back to your point around ecosystem. So when Standard Chartered took a step back, because obviously not all the banks went for virtual banking licenses. And it's also a very fair question, like, why did Standard Chartered go for a virtual bank license when others did not? At quite a high level from the teams, like there was this thinking that it was almost a philosophical question, like, do we have that right operating model to defend against potential disruptors? So say a Grab, or what we've seen like the Alibabas, the Tencents, the Ping Ons. And likewise, is there opportunity for us to kind of grow? Like if we wanted to grow, especially digitally in areas that were less represented, and I mean Standard Chartered, was there a way for us to do this? And very quickly, it kind of came to the conclusion that, if we had to do this, let's do this right. Let's build this from scratch and really learn from it. And actually, one of the really key themes, so we kind of have this thing on our walls, like, like the 10 big themes for us, was really around growing with our ecosystem partners. So we do not kind of walk alone, or whatever is the phrase that is, but it is about growing with ecosystem partners. And that's why the way Mox was structured was very deliberately, it was Standard Chartered in partnership with HKT and their parent PCCW, because they have the largest kind of market share on mobile phones, together with Trip.com. And again, that was really about that travel element.
Yeah, Edwin, I do agree with you. I think in terms of like the traditional banking processes and what happened in the past of the banking history, and there need to be a stronger focus on customer experience. Absolutely, and I think that's why what is happening in the industry is a positive thing. But in our mind, banking still is a people business. At the end of the day, it rely on people as well. And while we say that digital and an API and ecosystem is important, the trust, the relationship, and the engagement between bank and customer are equally important, or probably more important, particularly when you're talking about growing your wealth, realizing your dream. So in many cases, you want to talk to an experienced financial advisor or banker to help you with that. And we do see that, right? In Hang Seng, we in Hong Kong for 80 plus years, and our customer bank with us for second or third generation. And that relationship, that engagement, certainly with the most advanced technology, you can't replace it as yet. So that we still believe that digital is not important, but it's digital with that human touch. The option to then call up the call center or go into the branch, talk to your RM, and those are like bringing the banking together to give the choices to the customer, as well as serving them well when they need to talk to somebody.
If I can briefly just pick up on Nike's point, because there are parts I entirely agree with you. So I do think even, when Sanchar thinks about it, it's really that human engagement, extremely important, but for what? So I agree on an advisory front, on wealth management, on investments front, but well, at least from our experiences, there are certainly some tasks where I think people are increasingly comfortable. So this is a story, but this is a 100% true story. So my story was, I have twin boys, and my twin boys, for some reason on their 6th birthday, really, really wanted to open a bank account. Do not ask me why, but they just absolutely wanted to do this. And long story short, it ended up taking us an hour. And after the hour, I had one twin that was still comfortable to put their money with the bank. My other twin was crying because for some reason there was something in the experience where it felt off. So initially we asked him to, well, at least we came all the way here. You have your account open, at least put a little bit. So he did put a little bit, but then afterwards he cried because he just wanted to take it back out. And it was something to do with that experience. Because I mean, part of it was also, unfortunately the teller got the name of my twin wrong. So there's lots of little things where when I flip it around, I'm like, if Mox or any of the virtual banks can crack opening an account for kids, this would be brilliant. Like so where I'm challenging, it's more on the different task at hand. And I'm with you that human element absolutely critical, but I just don't think for every job.
And I would add that if you look at the questions about ecosystems and companies working in ecosystems, especially from financial services, we just had a prime example just last week. Citibank, Google. Think about that combination in the United States. And because I'm a loyal Google customer, I whipped up my phone, and within less than 1 minute, I had activated my Google Pay. And I had authorized Google to read through my emails, to scan through all the receipts and all my photos, which in some ways is a little bit creepy, but I authorized them anyway. They went through it, and within a minute after that, they created virtual transactions in my Google Pay. Because it read through my email, it knew that I had gone to the Shangri-La Hotel and I paid $85 for some bubbly water, for some satay, and for some char kway teow in there. And not only did it do that, it went into my receipt and it looked at my SKUs. And it said, literally, char kway teow, literally, bubbly water, literally. So that level of understanding of my financial life on the part of the eco, as all of us as practitioners of financial service, are things that you wish that you could have. Because literally, I know if each one of us could sit in front of every single customer one-on-one, I know each one of our institutions can provide them the very, very best possible service and all of their issues in terms of what they need to live their digital lives and their financial lives properly. We have the ability to do that. What we're really talking about is a scale problem. How do we have intimacy with hundreds of millions of people without blowing up the cost to ourselves and being able to do that? And really, this is why we're all here right now in terms of talking about digital banks and digital financial services, because we all feel the opportunity of finally harnessing computing, harnessing different ways of working, to your point, Nike, in bringing together this very friendly way of experiencing financial services to the individual that does not ring false, rings very, very much like water in the middle of a desert.
Put another challenge on the table. So I agree with all of that. And the young segment is certainly moving towards that, right? The convenience, the ease of doing something, and the integration with what a digital offering knows about yourself, and therefore customize the solution towards just you, right? I think that's amazing. That's kudos to the technology usage and AI and machine learning. But if you look back, there are still people who want to do simple transactions in the branches, talking to somebody. So we talk about 10K distribution earlier, and there's a lot of easy way to do it, right? Even on a browser or on an app. But there are still people who walk into the branches, not so young ones, and some of the young ones as well, go in and fill in the form and get that passport printed and make sure that that 10,000 is there. So there are choices and there are preferences out there.
I think it's interesting. We've spoken about a couple of things here around trust, because we've spoken around banks being historically the trusted and secure place to put your money. And Edwin, Philip, as you were talking about the capability with Google, I think there's an implicit level of trust that Google brings around the ability to provide that service in conjunction with, say, someone like Citibank, in being able to look up, one, make the right interpretation of the data and insights, but then also do that securely, right? And so then the third layer that comes into this is around how do you trust that ecosystem from a regulatory perspective? And so whether it's the Monetary Authority of Singapore or whether it's the HKMA in Hong Kong, these interplays of trust is essentially a very key component of the banking industry. And so I don't know, maybe Edwin, as you were thinking about Mox and building out the proposition, how did trust play into that proposition, or did it at all?
So critical. Trust, absolutely. Because to be honest, when we did our own research, so back to that 2,000 people, we literally did kind of blind test. And the short answer that we really got was most people would be quite comfortable taking a credit card offer or some loans from whatever was the cheapest source. But the challenge was really, if I had to deposit my savings, it was like $100,000, and you want that trust. I am 100% with Nike on that trust and how you build it. So that's why you'll see very clearly, but maybe we'll need to change our wallpaper. We always go by Mox by Standard Chartered. Like that recognition, that confidence of Standard Chartered, 160 years in Hong Kong, that does lend incredible credibility. The only point I'd make though, and this goes a little bit to Nike's point, is I'm not 100% sure the age, well, for lack of a better thing right now, and this is a bit flippant, but for example, my mom definitely spends more time on her mobile phone than me. Like she plays Candy Crush, but also my point would also be, again, back to your traditional dial-in phone to the smartphones. So you're right. So there was a certain time when I remember so many people were still hung up on when my parent was probably one that hung to the oldest, the Nokia phones or the flip phones or whatever it might be. But again, it goes back to, there has to be a reason. So that I completely agree. There has to be a reason why someone feels comfortable. Like there has to be a reason why, this is why I do it this way entirely digitally, or this is why I do this entirely digitally. And I think for us, it's almost to provide that right experience, absolutely right, and providing the that trust, which is very hard to build. And for us, it was all around, we have a new brand. So Mox, and when we did kind of the research, was a name that was relatively neutral, but how can you give people that sense of comfort? And that's why the Mox by Standard Chartered is honestly so critical.
Anything you'd added on the trust front, Philip or Nike, before we move on?
I think that if you really boil down what financial services, to what you just said, Fergus, it boils down to trust intermediation between folks. So it's really key if you want to play in the space. For us, partner branding along with Grab is really important. You see it everywhere. I think there'll be more prominence of it, especially as we go deep into financial services.
So why don't we, sorry, were you going to say something?
I do agree there about the trust as well. Yeah, trust is important, absolutely important. If you imagine you have your lifetime saving, your pension, where would you place this nowadays with the offers out there, right? And I guess most people will stay put it into a incumbent bank with many years of history and so on. It's not just the brand itself, is also the tradition, also the regulation, also the underlying makeup of the organization, the conduct, the culture, the way to manage risk as well. It's all come together and therefore build out that banking institution for so many years, going through so many troubles and are still there. And therefore those are the like affinity that you have, like in terms of yourself, your past generation, and that's I guess what we want to carry on building, certainly in Hang Seng with our customers.
Actually, Fergus, if I can interject before we switch topics, I want to be a little bit of a rebel here because when we talk about trust, it's pretty easy to figure out trust given our financial structures and institutions that we have right now. There is a growing trend that we all see also every single day. As Bitcoin hits its new highs again, that there is a new generation of people that also look upon cryptocurrencies in a manner that is more similar to us perhaps years ago, or even right now, looking at gold as a safe haven. For whatever reason, they have trust in crypto building upon itself as time goes on. And if you look at what the basic value added of blockchain is, you just take away the speculative side of things. Blockchain it goes back to the disintermediation and creation of a different trust mechanism. So financial service always boils down to that, but there are different modalities of trust that we should really also keep an eye on. Certainly it's a minority right now. Certainly the central banks are on the side of traditional financial institutions, but who knows where that's going to go, but certainly interesting to watch.
And for me, the only point I kind of want to build on Phil as well was really twofold. I mean, back to the whole, in Hong Kong, you're right, in terms of the selectivity. But if you kind of fast forward and you look at, let's say, China, that level of comfort, especially with some of the digital players, is honestly a lot higher. And I think for us, it is for the industry. And I always see the banking industry as a whole. So it's kind of a bit blurry between, let's say, a conventional bank and a virtual bank. Because at the end of the day, it's just a bank being regulated by the HKMA. And likewise, M&As when the time comes. And it is as an industry level, like how would we think about, where do we go next and how would that next look like?
Great. I might move us on if that's okay. There's a very interesting topic to dive into, but I would like to get into a little bit more around innovation, FinTech innovation, and what's required to drive that forward into the future. From an Accenture perspective, we recently conducted a survey in Hong Kong of 128 multinational financial institutions and FinTech startups. And what that highlighted was there were sort of three key things that were in urgent need of attention if we were to accelerate innovation or FinTech innovation, at least in Hong Kong. The first one is broader adoption of FinTech solutions. The second is fostering a culture of entrepreneurialism, which was slightly interesting to me, given the historical nature of Hong Kong and perhaps Singapore as a hub of entrepreneurialism. And the third was then the development of FinTech talent. So I'd be interested to get your thoughts around one, or at least starting by getting your thoughts around what's needed to drive the innovation and what are the big challenges that you're seeing in driving that innovation in the financial services space in Asia Pacific today. Maybe we can start with Nike, if that's okay.
Sure. So we talked about earlier, how do we move into a digital space a lot faster, quicker in terms of the competition. In Hang Seng, what we're trying to do is one of the area looking into is how do we create a innovation and entrepreneur culture in the organization. And we have a long history of legacy, some very, very good traditions in there. But some of the processes are not allowing us to move forward quickly. So within Hang Seng, we run an agile program for a couple of years now to move the organization forward in terms of how do we deliver more rapidly on customer MVP and so on. And we have a internal structure called FinTech incubator. So this is FinTech and incubator. And what we're trying to do is promote an internal startup culture in the organization, giving media funding, going through Dragon's Stand, going through coaching and mentoring for these internal startups that our staff thought that they have an idea, they have a dream, and they feel that this proposition will work in the market and will work in banking as well. And therefore, we create an environment whereby they can like pitch for media funding to grow their own company internally. And we do other things like solutions showcase, bringing fintech in. We're doing events like open banking events, data hackathon, and so on. The number of things that we're trying to do in the program is not only just to create a solution which is useful in banking, but more importantly, how do we create that entrepreneur culture? How do we tell our colleagues that it's okay to make mistakes? It's okay to test and learn. As long as you understand that there is something that you need to change and then shift, and this is a mistake, and therefore learn from it. And how do you create that innovative and entrepreneur culture in the organization, so people come up with their idea, come up with their suggestion to move the organization forward. So that's what we're trying to do, and we're on the journey of doing that to bring the young ones along and probably the not so young ones as well.
Okay, thanks. Philip, how would you describe, from your perspective, the need to drive things forward from an innovation perspective and the challenges to that?
Yeah, I think perhaps uniquely with Grab, we don't necessarily have a lack of drive and energy for innovation, because it's almost by definition with the people that we currently have. And I think in terms of the distribution of people who have joined Grab, I think probably around 30 to 40% are between 0 and 2 years in with us. And then probably the ones who are 7 years, 6 to 7 years and above, it's probably less than 5%. So, it's a little bit of a self-selective society of people. So from the get-go, it's all about the governance of which ideas get tested for second and third. And I think on the corporate level, the important thing for us is to get into as much of people's lives, broadening the ecosystem as much as possible, and then just unleashing the thousands and thousands of people with some of the best tech platforms out there to be able to then experiment through the eco at the same time. So to us, it's a little bit of at the exact level, it's about governing this mass of people internally who are trying to innovate, and also being responsible to the folks who provided us capital at the same time. So perhaps it's a little bit different, because we are both an elephant and also an elephant that's expected to dance at the same time. And I think we do pretty good pirouettes right now.
Very good. I'm looking forward to seeing that in Singapore if you get your digital licenses. Edwin, from an innovation perspective at Mox, what do you see as important and what do you see as the challenges?
I think we echo the 3 challenges you've raised in your study. So when we built the bank, I think while there are a lot of very good programs in schools around fintechs and innovations, and certainly kind of business schools covering this, we did have some challenges in our kind of finding the right people with the right experience. So while I think Hong Kong is incredibly rich in terms of people with banking experience and banking knowledge, and a lot of bankers, there have just been fewer people who've really built a bank from scratch. And that's why, at least on our side, it's particularly for very specific roles, whether it's around kind of cybersecurity or just around cloud or whatever it might be, we've had to find resources globally. So I do think as we consider this, it really is maybe encouraging more of the, so we've been told that there are about 260,000 bankers in Hong Kong. Like, just, I mean, for people who do want to think about, the next 5 years, the next 10 years, the next 20 years, how would you build out those skill sets to really embrace, this development of the economy?
I'm glad you brought up the talent point, Edwin, because I was going to say in Hong Kong specifically, and I can see down not very far away in Singapore and the other countries where these virtual banks have been rolling out, the war for talent with the right expertise in how to do product service design, how to think about the end-to-end customer journeys, how to run agile organizations is just going to continue to heat up. And so I think that was very interesting for you to touch on. Is there something that you're thinking about in terms of that either the regulators or the governments could do that could help foster the availability of that talent? And I'll go back quickly to Edwin on that, and then I'm maybe interested in the views of Philip and Nike.
On our side, to be fair, part of it actually goes back to the partner ecosystem. So we did leverage on partners in terms of how we could build this together. The other point, I'll have to have a bit more think in terms of, Hong Kong Inc., what can be done. Because even for a lot of, I guess we can say, expats who's come to Hong Kong, it goes back almost to your first question. It has been incredibly challenging, kind of given the external situations. So for example, various colleagues where they haven't been home for, God knows how long, and part of it is just it does add to that stress. And so there's so many people's stories, even as we were building this bank, for which they've had to face.
I might cut you off there if that's okay, Edwin. And just, I know we're going to run out of time soon. I just want to get a quick view from Philip and Nike, and then we can run a final question. So, Philip, any view on the talent piece?
Yeah, I think it's super challenging for us in Singapore, especially with regards to more incursion of Chinese tech companies creating their base here locally in Singapore, and they're starting to take away some of the folks who would have ordinarily considered us. And so the competition is there, but I think we do have a really bright future that we can sell to the folks who do eventually join us. And I think that the important thing about talent also is it's a matter of how we run the institution itself. I think if the institution runs on the basis primarily of first principles, if you're in banking, you very well know economics, you very well know finance. If you don't know, you're a smart person. In 6 months, you should be 5 times smarter than you were in the beginning of 6 months. In a year, you should be 10 times smarter. And if you do that within the space of 2, 3, 4, 5 years, you would build up your cadre of people that you would need also. So there's an element of how you run the bank versus bringing the people from the outside also.
Got it. Naki? Maybe
yeah, certainly a serious challenge. As Edwin said, people who understand banking and tech together, that combination is difficult. And with the market development, retention of talent is difficult as well. We're trying to work with the universities, with Hong Kong MA to these FinTech management trainee and so on. But the supply is quite limited, so we need to continue to grow that. There's a lot going on, and obviously tech is moving rapidly forward. The emerging technology, in order to keep up with pace, the tech guys need to spend a lot of time doing the tech stuff, right? And then at the same time, you need to learn about banking as well. That's a real challenge.
Okay, thank you. So I think we've got about 2 minutes left. Maybe I'll just ask one very short, sharp question, which is if you could make one bold prediction for 2021, what would it be in terms of the future of banking? So maybe Philip, we can start with you if that's okay.
So for 2021, I think as we see COVID-19's effects die down, especially towards the later part of 2021, I think what would be interesting is that, to me, the possibilities in M&A and in regulatory changes could actually accelerate into 2021. So I think 2021 is a year to watch and to see many more changes coming, especially for us in financial technology.
Good. Nike?
I think the bank will start working with the non-bank very actively next year. So the corporate and the banks will come together. We talk about the ecosystem, the API. I think there will be significant development on that front. There will be some failures. There will be some that does not work. But there will be a good bunch that create new proposition, which is benefiting the community and the customers.
Great. And then Edwin, from a Mox perspective or from your perspective?
This is more a hope than a prediction, but that rapid acceleration of virtual bank adoption in Hong Kong.
Okay. Well, with that, I'll make a bold prediction that there'll be a FinTech pro. Thank you, Philip from Edwin from Mox and Nike from Hang Seng. Really appreciate the conversation today. Thank you very much.
Thank you, Fergus.
Great stuff. All right. Thank you for Fergus and the panel. Interesting discussion. I'm sure we wish we'd had more. Maybe we can ask some of the questions, if you'd like to, in the box on your right-hand side, and they can get back to you at another point. So now we come towards the end of our day, and it's my pleasure to introduce Hui and Jeffrey, who are on the program team for the FinTech Lab, to give us a few closing remarks. Thank you.
Thank you, Nick. Hello, everyone. Thank you for joining our first ever virtual demo day. We hope you find it informative. And please do reach out to our startups via the book a meeting function. We welcome further discussion with our startups and potential opportunities. It's been an incredible and action-packed journey with our 10 finalists in the last 10 weeks. But our journey together doesn't end today.
We will continue to help nurture our startups via post-lab engagement. The team has brainstormed FinTech Lab 2.0 initiatives, along with our founding partner, Cyberport. There will be a lot more collaboration with FI partners, regulators, government bodies, investors in the future. So stay tuned. We welcome feedback which could help us do better next year. So please drop us a line and feel free to connect.
Thank you. I wish you a good year ahead and see you in 2021.